Welcome back to my channel, where we dive deep into the world of personal finance, money management, and everything in between. Whether you're a seasoned investor or just starting to dip your toes in the financial waters, this is the place to be. So grab a cup of coffee, pull up a chair, and let's get started on our journey to financial freedom. In today's video, we are going to talk about the surprising ways your credit score affects your life. Many of us have heard about the importance of maintaining a good credit score, but do we really know how it affects our lives? Today, we will explore the various aspects of credit scoring, including what it is, how it is calculated, and why it is important for both those who have taken loans and those who haven't. What is a credit score? Your credit score is a three-digit number that indicates your creditworthiness. It is a measure of how likely you are to repay your debts on time based on your past financial behavior. Your credit score is derived from your credit history, which includes details of all credit accounts, repayment history, and credit inquiries. Why is credit score important? Credit score plays a significant role in your financial life. It impacts your ability to borrow money, the interest rates you are charged, and even your employment prospects. Here are some ways your credit score can affect your life. Loan approval. A high credit score improves your chances of getting approved for loans such as home loans, car loans, or personal loans. Banks and lenders use your credit score to determine whether you are a reliable borrower and if they should lend you money. Interest rates. The better your credit score, the lower the interest rates you'll be offered. This can save you thousands of dollars over the life of a loan. On the other hand, a poor credit score results in higher interest rates. Employment prospects. Some employers check credit scores during the hiring process. A low credit score could impact your job search negatively. Insurance premiums. Insurance companies often consider credit scores while determining premiums. A low credit score could result in higher insurance premiums. How is credit score calculated? Your credit score is calculated based on the following factors. Payment history. Your payment history forms the most significant part of your credit score. Late or missed payments negatively impact your credit score. Credit utilization. It refers to the amount of credit you are using compared to the credit available to you. Higher credit utilization can lower your credit score. Length of credit history. The longer your credit history, the better your credit score. Credit mix. A mix of different types of credit, such as credit card loans, car loans, and mortgages, shows that you can handle different types of credit responsibly. New credit. Applying for new credit frequently may indicate that you are experiencing financial difficulties and can decrease your credit score. How to improve your credit score? Pay bills on time. Timely payment of bills is one of the most critical factors that impact your credit score positively. Ensure that you pay your bills on time every month. Reduce credit utilization. Try to keep your credit utilization below 30% of your credit limit. Check your credit report regularly. Check your credit report regularly for any errors. Dispute any errors with the credit bureau and get them corrected immediately. Maintain a good credit mix. Having a mix of credit types such as credit cards, loans, and mortgages can improve your credit score. Avoid frequent inquiries. Do not apply for credit frequently. Multiple credit inquiries can negatively impact your credit score. Conclusion. In conclusion, maintaining a good credit score is essential for your financial stability. It impacts your ability to borrow money, the interest rates you pay, and even your employment prospects. By following the tips mentioned in this video, you can improve your credit score and lead a financially secure life. Thank you for watching, and I'll see you in the next video.